My name is Jahn Karsybaev. I'm a co-founder and managing partner at Big Sky Capital. We are a $20 million early stage fund investing in very, very early stage enterprise SaaS companies.
Hey everyone, thanks for tuning in and welcome to the VC Architects, the podcast where we share the real stories behind new VC fund managers and the blueprints used to make them successful. My name is Vlad Cazacu and I'll be your host today as we interview Jahn Karsybaev, a friend and fellow immigrant investor based in South Florida. He has started and led numerous businesses and leans on his experience as an operator and a vast network to provide great insights in today's episode. He's also the co-host of the Ivy podcast where he interviews senior leaders of Fortune 100 companies. For more information about starting and growing your venture fund, including show notes, highlight clips, and exclusive scenes, follow us on Twitter and Instagram at the VC Architects, as well as on our website at thevcarchitects.com. This episode is brought to you by Flowlie, the number one choice for deal screening and network management, used by hundreds of investors from 50 plus different countries. Now, let's dive right in. Jahn, such a pleasure to have you on the podcast. It feels like not long ago, maybe 2 years ago, I was on a guest on yours, so it kind of comes full circle as we're starting today's conversation.
Yeah, it definitely does. It feels like forever. I'm excited about this. I'm excited for you. Congrats on the launch as well. And I know how exciting that is.
Really appreciate it. I think there's even bigger news to discuss in this conversation, which is really the launch of Big Sky Capital. But before we get into that, would love to go back the time a little bit and discuss about your life and your time before you started angel investing, right? It was a mix of consulting and entrepreneurship work. You started a few companies. So tell us a little bit more of what Jahn was like before he started investing.
Yeah, for sure. I try to keep the thumbnail in high level, so not to bore anybody. But essentially, the journey starts at the University of Montana, where I did the undergrad, and hence the name for the Big Sky Capital, because Montana is a Big Sky country, and that's where me and my fund partner actually have met during undergrad studies. And then after that, I spent a few years in corporate Fortune 100 organizations in various roles as a technology executive. And throughout that journey, also had multiple startups of my own, quite a few successful failures. We had one exit, me and my fund partner as well, where we've built essentially a professional network for Central Asia at the time. And throughout that journey as well, just the experience we've had fundraising for different startups with different funds and investors that led to a formation of a certain thesis as well, and some of the things that we wouldn't necessarily do as investors throughout that journey. So that really helped shape some of our vision if we were ever to do this. And we also, through some of the smaller exits that we had, we were able to build up some smaller capital to be able to angel invest into startups. We've been writing very, very small checks, mostly getting access to startups through the actual sweat equity and trying to get myself plugged in as an advisor with some type of a consultant and essentially squeezing myself into the deal. And that really kind of exposed me to the whole world of venture. And so in the past couple of years, me and Adil, we've kind of reconnected and decided that through the both of us experience that we had decent enough of a track record that will resonate with some of the potential LPs, and went on the fundraise journey for the past year and a half or so. And we've closed the fund on New Year's Eve of last year. And it started great, but we can talk further a little bit through the fundraise journey. It's been a great learning experience. And we've been actively investing, deploying capital as of February of this year. So that's essentially kind of a thumbnail version, 10,000 foot view into the journey so far.
I think it's really worthwhile to dig just a little bit deeper in that entrepreneurial phase of you starting a number of companies, having one successful exit, learning a lot, and then getting to angel investing and initially through, sweat equity. So I'm curious, some of the highlights of the entrepreneurial journey that really shaped the way you're viewing investing now from being on the other side of the table. And you alluded to a little bit earlier, but we just want to get some concrete examples of some of these moments.
Yeah, there's a ton that comes to mind, and really the early days, some of the earliest startups is, I think, biggest lessons learned is the kind of the self-awareness aspect, and really trying to also respect the fact some of the things that I personally didn't know as a founder, as a CEO, as a leader of the company, and at the end of the day, really also focusing on what's really the most important, especially in those early days, is not only growing the company, but also, hiring aspect is, the number one task for any CEO. And those are some of the lessons learned, just to also being able to delegate effectively. Those are some of the leadership capabilities that I was lacking at the time, and really invested a lot of resources into developing myself as a leader. And with every journey that I've had, that really, that helped level up, in essence, building a rockstar team around me and execute on the strategy that we all had. The other component was also being able to essentially transition effectively from the three distinct stages that every founder goes through, from an idea to building a product, and then actually to executing. Because some of the lessons learned through the successful failures is also the too much emphasis and focus on building a very perfect product, because you can build it and build it and build it and just not knowing when to stop. That was the biggest disadvantage. And instead, taking what's essentially as that even maybe a greater version of an MVP, and being able to go out there and focusing on the customer feedback, customer traction, some type of a validation in the market before investing even further into perfecting the product. So those were some of the lessons learned through some of those very early stages as a founder myself.
And are you finding yourself coaching a lot of founders and peeling back on some of these, initial learnings and bringing that back into conversation with them? I'm wondering, how are you seeing your true value as an investor, having been a founder several times with, as you mentioned, the successful failures as well?
Yeah, I love that question, because we spend a great deal of time these days answering that question ourselves as we partner with founders. And it's the part of the investment thesis is also really focusing on kind of that underrepresented, overlooked, diverse group of founders. Folks like ourselves, you and I, coming from nothing and just not having access to capital, and essentially understanding how the whole world works. That resonates very well with the founders that we partner with the founders that decide to take our investment. So I see a lot of value there. I see a lot of opportunity there myself. And then also, before every investment that we make, is the question that we ask ourselves is, can we actually help this company? And if we can, then we definitely see potential synergies and moving that further. But with money being such a commodity, the writing a check just only goes a certain way. And that being a long-term relationship, really focusing on just the dynamics of the energy dynamics of how well we work together, that takes a lot of discipline that I would imagine that's only going to continue to evolve.
There's a lot of parts of your answer I think are worth exploring further, but I would start probably with the thesis of the fund. Can you explain a little bit to the audience the thesis of Big Sky Capital, and really the process of formation of that? Was that something that was with you for a long time before you started, or is it something that developed organically after you started, made the decision that we're going to start a venture capital firm?
I think we've been lucky enough to experience that and test the hypothesis on our own on a much smaller scale. And that really helped us shape the investment thesis that we have right now with Big Sky Capital, at least at the moment. And the focus is on three components. I've mentioned the overlooked, underrepresented founder. Those are the relentless ones, those that will never take no for an answer, and that will come up with a creative solution to any problem without losing the drive. That's the most important one. The other piece is the emerging markets. We have offices in South Florida, Kazakhstan, and Southeast Asia. That really gives us a very global perspective and view into emerging markets. And also, it allows the teams that we back to prove out their product, prove out their solution, that there is a market fit, at least dominate the local niche, and then expand and grow further into much larger markets like United States, for example. And then the last component to the investment thesis is the enterprise SaaS. And it may sound like as a cliche that, it feels like every other fund is enterprise SaaS, at least in my own little bubble. But the reason we really focused on that is because of the type of founder that's actually building a solution for enterprise, for B2B. We've discovered that it's not a type of founder who is just fresh out of college or high school that's building some type of a D2C product. It's a very experienced executive who has spent a great deal of time at enterprise, experiencing hands-on a particular problem, and being able to also recruit a rockstar team and motivate them to believe in that vision, and then go out and build a solution for that particular problem. We see a lot of opportunity there. We see a lot of characteristics of very successful founders from that standpoint. And it takes a special skill set, it takes a special experience to be able to not only build, but sell to enterprise. So those are the three components that we see as kind of that unfair advantage from a standpoint of us just distinguishing ourselves from many other funds.
I'm hearing experienced founder coming from an enterprise background with significant experience in that particular organization, but at the same time, your whole thesis around being very early stage, cutting even small checks very, very early on. So I'm curious your process around discovering those up and coming entrepreneurs who are probably about to leave their enterprise roles and start the next big thing. And how early do you really get involved with those organizations?
Great question, and it's an ecosystem that we continue to develop that really allows us to keep the hand on the pulse all across, not only in the startup ecosystem but also at the enterprise level. Because I spend a lot of my time talking to a lot of executives at even very large organizations, and at the end of the day, even you do the podcasting and you understand the value of how big of a and powerful tool that is to blow up your network, to expand just tremendously. And I really focused on that because through my own podcast I've been able to connect with technology executives at every level, from president of Microsoft to mid-level management at just small technology companies. And that those conversations never stop. Those conversations are ongoing on daily basis, not even weekly these days, because it's the power of a network and referral, because one guest introduces to another. And those, I love those because I personally learned quite a bit through those conversations. The other component to that is also us being able to represent the Big Sky Capital at a lot of conferences. Just as an example, this summer we've been attending quite a few conferences in Central Asia, in Caucasus, and it's very unique markets, but it also provides a very interesting perspective into what other emerging markets are actually focusing on and what are some of the solutions that we can potentially bring to United States as an example. And also we as Big Sky Capital, we host a lot of events of our own, real life events, no longer remote. We bring people together in all three markets. And essentially, the format of that is very straightforward. It's either a portfolio company or some very interesting founder who has the experience and proven track record of building the company from zero to some type of successful metrics, and being able to share that experience, not only on the success, but also what are the things that they've learned through that journey. I see those panels as very successful. I've been hosting events like this on a monthly basis, and we pack the house every time because there's so many founders that can relate, and the stories like that resonate on so many levels, and it's a win-win all across. It also gives me an exposure into potential other founders who are trying to operate in something like this. So those are just some of the simple strategies that really help us continue grow the exposure into amazing founders.
I think it's a very interesting approach that you're taking to this because you're multi-market, but with experience in emerging markets and a background there. But at the end of the day, still aiming towards bringing some of that businesses in United States. So I'm curious your perspective around the investment opportunity on companies that are not yet focusing on the US market. And is everybody then poised to then come and do business in the United States, or do you think there's enough opportunity outside as well?
It's definitely not a must-have element to be able to expand and grow into some massive market, but also there's got to be a vision to go grow outside of just the boundaries of the emerging market. First things first, being able to iterate and being able to focus on just at least a short term for now and dominate a particular niche and execute the strategy on that. That's the focus number one. And if we see the founder or leadership team capabilities of doing that, and then being able to come in with our value add services as a fund and help them build a scalable solution that grows even outside of the boundaries of that specific market, we see a lot of value there. We see a lot of traction there. So it's both ways. We definitely want to see the grand vision as well, because sometimes it's very hard to articulate that as well. I've actually found that a lot of founders struggle with that if everything was to go perfect, what is that big sky, what is that kind of the perfect case scenario, where do you see that? And those that are able to clearly articulate without losing the focus of just a short-term execution strategy, I see a lot of potential there.
So I'm curious how you are articulating the Big Sky vision for Big Sky Capital on the LP fundraising. Like, I think we've talked a little bit about the way you're investing money, but I think a lot of people are interested in understanding more on how you got the money in order to invest. So let's get back to the very first decision to start Big Sky Capital. And I would like to start a fundraising conversation around the whole idea of a partner, a co-founder in a VC firm. You started this with another person, Adil. Walk us a little bit through the process of making that decision together and why you choose to go with a duo GP rather than a solo GP format.
Yeah, the fundraising is exactly almost identical to any startup fundraising from VCs. It's almost the same process. And at the end of the day, being such an early stage, not early stage, but first time, fund manager, being the vintage year, at the end of the day, you don't have necessarily a track record that you can sell. It's all about you. It's all about you as a person. It's all about your ability to execute. It's all about your ability to showcase that unique advantage that, not many can offer to potential LPs, because LPs are very sophisticated investors as well. And they need to be able to understand what really makes us different and how we're able to execute on that. But building on that grand vision, that future for the fund in itself, me and Adil will spend a great deal of time analyzing and discussing that, because we're both at the stages of our career where we don't necessarily need to focus on, just a career that we're building, but more of a legacy. And really, it was very important for me to build that generational aspect of the fund, where even my own children can be involved. Hopefully, that was really the vision, that it's not going to be one fund 1 through 5, and we will exit and we're all going to be just nice, happy, and rich. It's at the end of the day building a something that's sustainable, something that's going to grow through generations. Because also the conversations we've been having with LPs is that a lot of them value that aspect, because they want also their children involved in all of the aspects of the venture capital, from deal selection to be able also to understand what it takes to select a company and be a professional capital allocator. Those are some of the thoughts that we've really played with early on before we even decided to go on that journey. Because at the end of the day, the 3 stages that you go in life is that you learn, then you earn, then you return. And in those stages, we feel like we've gained enough of experience as founders ourselves, even though we are still founders, because at the end of the day, building a fund is exactly the same as we have our own startup, just playing in a different spectrum. So those are just some of the thoughts that really played into us shaping up that vision, shaping up that overall strategy for the fund in itself.
Who was the first person who heard you say these things and say, you know what, John, I agree with you. Here's a check to make this a reality. At what point did the fund move from an idea to an actual fund and you were off to the races? Who was that first? Yes. And how did it come about?
We've definitely started with our own direct personal network. I've went to my mentors. I've gone to my professors. I've gone through my direct network, and I just wanted to not even pitch, but really be able to articulate clearly the vision that I personally have for the fund and what I'm trying to build here, and if that even resonates on any level, and really get an honest feedback from that standpoint. Even how do I sound when I articulate that particular story? Because at that stage is all about storytelling, and then even believing yourself in that your capabilities to execute. So we've focused on that, and we've gone through a great deal of exercises. Just it's a pitch after pitch after pitch. After 99 pitch meetings, you may get one maybe, and that one maybe that actually leads to further that snowball effect that makes the further introductions. And it's really going after just shaking every tree that I had, and just asking for any referral, any other recommendation that I could possibly get in front of. That also really led us to really build that momentum. And from Adil's side as well, he comes from institutional level investing as a venture capitalist and managing the sovereign wealth funds as well. And he focused on some of the institutional level investors from his side, where I focused on more of a practitioner, the technology executives at different companies that also understood the importance and how to be an effective board member, and how to also be of a value add investor at the end of the day. And I already see some traction when it comes to just utilizing ULP network in being able to not only win deals, but also help the portfolio companies.
Absolutely. And what do you think resonated most with some of those earlier pieces, right? You say that you started at your initial network, and at some point you had to go outside of that through referrals and through introductions from existing and other GPs, etc. What do you think resonated most with those people, and why did they say yes?
The Yes, of course, multiplying your capital is very important for any investor, but at the end of the day is also the story of essentially us, me and Adil, going through the journey as startup founders ourselves, and what we had gone through and utilizing their experience to help the kind of the next wave of founders from that standpoint, and being able to use that experience that we've had to help them maybe fast track, avoid those mistakes, streamline the process, and actually build better, bigger, faster. Those are some of the things that I think resonated very well. The long termness of the longevity, I guess, I don't know what's the right term, of the fund, I think that also resonates, and I would imagine that resonates with me when I talk to founders, is when you have the very long term view into things, because it's not a sprint, it's a marathon when it comes to building a company. And it's also, it's a marathon from a standpoint of building that relationship as an investor and the founder, because if we can work well together, it's going to be very challenging for us to break up. So we take a very, very curated approach to really figuring things out. First things, if we a great match for us to be able to work together. So those are some of the components that I think resonated very well with the LPs when we go through the fundraise.
So what ended up being the fund composition from an LP perspective? Is primarily high net worth individuals, family office? Did you try to raise any institutional capital? How were they different throughout your fundraising journey in the way they, approached investing in the way they made decisions about investing?
Yeah, we've dabbed into institutional level investors, but also came to a quick discovery that we're too small, we're too early, and we also focused on just keeping them informed, keeping them in the loop on what we're trying to build, and that's ongoing. That will never stop. But the great profile of a LP that we've discovered is, as an example, a technology executive at a Fortune 100 organization, or an oil executive at a major corporation, who has built a certain level of net worth and now looking for ways to diversify their portfolio because of the investing real estate and public markets are, those things are common sense. Going into something as high risk as venture, also very successful investors have that representation in their portfolio. So we found a great match from that standpoint to focus on those individual investors, high net worth individuals, but also executives at organizations of various size, who also understand the components of company team building and what it takes to essentially scale and grow. So those conversations, we found a lot of synergies to be able to clearly articulate what we're trying to build and how those investors, LPs, can be of value beyond just a check to us as well.
What I'm hearing you saying is that there was a lot of expertise also on the other side of the table. So I'm curious to learn how much time you actually spend teaching people about venture as an asset class and an opportunity for them to allocate to it, diversify, manage their broader risk as part of their portfolio versus convincing them to invest in your fund. Did you notice that most of those LPs already had a really great understanding of venture investing and fund investing?
I love that question, and obviously you know what you're talking about, because me and Adil, as we were going through the fundraise tour, we quickly realized that uh, you know not everyone knows what venture capital is, and we made the wrong assumption through these conversations. As we were going into the conversation, let's say with a technology executive at major healthcare corporation, we assumed that that was a common sense, that they, with the level of sophistication that was common. And that was the mistake that we've made, that we quickly realized that it is an educational process. Not everybody knows, not everybody is even interested, not everyone's the priority to know what that industry is even for, or what it's all about. So we had to quickly adapt to that and really develop the kind of the story and the messaging when it comes to educating the person we were pitching to, what the venture capital is all about. What's the value? Why does that even exist? And what makes us different? Those were very, uniquely discovered conversations where we realized that It's not for everybody, and it's not, at the end of the day, those individuals, they've been focusing on building their own careers, building their own companies, and not necessarily focused on being an investor. And that continues, that educational aspect also continues even to this date, even after some of the LPs invested, because we meet regularly with a lot of our LPs and we share some of the things that we execute on a daily basis. And there's also a small portion of other LPs that were very transparent with their intentions. They said, look, it's our long-term goal as well to build our own fund. And instead of learning from mistakes, we rather have a front row seat to what you guys are doing, to mistakes you're going to make, hopefully none, but also and learn through that experience and then utilize that to build our own funds, which I thought that was genius. I thought it was a very smart approach to certain things. And so those were some of the discoveries that we came to a realization as we started working with a lot of LPs.
The latter one is really fascinating. I mean, pretty much a discovery check as an LP in order to, as you discussed, learn from the experience of others before building their own. But I do have one quick follow-up on what you were saying about educating others and that being actually a discovery too, because we're not really expecting, because of the level of sophistication of some of those LPs. Are you seeing, or did you at any point see that lack of sophistication or understanding of the VC market as a disqualification for them to potentially be LPs, or as an opportunity for you to educate and then convert a potentially previously non-LP into now a fund LP?
So it takes a lot of discipline to be able to do that. And we still deal with that, because I preach that to a lot of founders myself who are about to go on a fundraise tour also themselves, is that pre-qualifying investors is extremely important. But I know how hard that is. I know how difficult that is. And I know what kind of muscle that takes. I know what kind of discipline that takes. And I lack that. And I continue investing into that myself, because it's sometimes it may feel like, almost desperate, that nobody would listen, nobody would even take the meeting. But at the end of the day, it's better to continue and struggle through continuous pitches than taking the money from somebody who is not well qualified to be even on your cap table. Because I know firsthand what it is and what that leads to. Because the downstream effects of that relationship, it could be detrimental to the company's success overall in general. And those lessons learned through that conversation, through those experiences, I'm trying to bring that now to where I am these days as a VC, because at the end of the day, it only takes one rotten apple to ruin the whole batch. Because the investors who don't share some of our principles, some of our values, and the vision, the long-term vision view into that, and instead looking for something much quicker, it takes a discipline, but it's something that we really have to focus on the longevity of this. And that's we try to keep each other honest from a standpoint of, it sounds easy to take that money now and go execute without focusing on the potential consequences of just being that long term.
So how do you really assess LP GP fit over the course of a number of meetings, maybe in person, maybe online, with maybe some individuals who didn't have a vast history of working together in the past?
Yeah, great question. And there's no single answer to be able to come up with some type of a formula for us to assess whether we're a great match for each other. Just like in any relationship, it takes a lot of effort, it takes a lot of time and commitment to really figure out, if we are a good match. And we do that through a number of different, activities, such as just essentially relationship building, even through just collaborating on maybe helping a particular startup together. Or if I make it, an introduction for you, just also observing how you actually run with that, how you follow up with that. Do you take no for an answer? And just being able to continue that dialogue and also see that from both sides, that you also have vested interest in building that relationship and building that into a long-term thing versus just that being very transactional. That's very important. I meet with all of the LPs on, ongoing basis. And it's more of a friends first type of mentality where I can share, I'm comfortable sharing not only successes, but also, I'd rather start a conversation with, here's where we're struggling, here's the areas where it's going to be bad. And I look for that as well in the relationships that I have with the founders as well. And if I'm able to have that dialogue, with you, if I'm able to have that, comfortable, transparent conversation that both of us are about to eat shit, but here's a strategy how to fix that, and let's work together. I see those as kind of key ingredients into figuring out if this is a great match.
It almost feels like you're taking the LP for a test drive with that conversation about working together on a particular support opportunity for a particular startup or anything else that you're working on. But also really like the leading with transparency and being able to build a honesty-based relationship with them, because at the end of the day, it is a multi-decade engagement. It's at least 10 for the first fund. And it's very hard if you're not getting on the road with the right people. We
Yeah.
had someone on the podcast said you're really going to war together, so you want to make sure you have the right soldiers around you, because they're going to have your back at some point, and you do the same for them.
Yeah, you nailed it on the head. It is a war out there, and at the end of the day, am I the type of player you would hate to see on the opposite team? Am I the type of player where you'd rather have on your side? That's the view that I take, and that's the view that I love to keep in perspective when talking to other potential investors. Because at the end of the day, it's like you said, multi-decade engagement, and we rather have fun and enjoy working together rather than just you giving me your money and try to asking me every other quarter, has that multiplied or has that decreased? I don't want that.
Absolutely, and that's where the education on the asset class comes in real handy. I think
Exactly.
we've all seen and interacted with some of that persona of LPs. But digressing, um, curious to understand more about what didn't go well during the fundraising. I feel we spent some time discussing about the wins, the first yeses, the point of resonance between the GP and the LP. One of the unique features of this podcast episodes that we're really peeling back the curtain of also the mistakes and what we learned from them. So I'm curious now, looking back at fundraising for Fund One, what will be some individual episodes that you would point to on things that really shaped the way you're thinking about fundraising that you're going to make sure that you're not doing during the Fund Two fundraising?
Yeah, great question. There's definitely, a long list of mistakes or lessons learned that we've uncovered through the fundraising tour for Fund One. I've mentioned one of them, which is probably one of the most critical ones, is making that assumption that the knowledge and understanding of venture capital is common. That was a very wrong assumption of us, and we've lost quite a few, not lost, but had, not the most effective conversations where we made that assumption and we actually went straight to the pitch, and that didn't resonate on any level. That was very important lesson learned through that conversation. The other aspect of that is also the relationship aspect. I know it sounds pretty ridiculous to also focus on building relationship first, but that's really important, because I would hate just to show up out of nowhere, out of blue moon, and say, hey, I'd love to pitch you and tell you about what I'm building, and just why don't you give me some money? That's definitely not the best way to do this. And we've had a few conversations like this where we essentially just took the meeting for the sake of scheduling it. The other aspect is also, you've mentioned that the pre element of that, because we thought, made that wrong assumption that even without pre-qualifying, even if we pitch and if it doesn't resonate, they will still make an introduction to somebody else from their network. That's total bullshit. And I actually utilize that even now, that if I'm not going to invest, don't ask me for referral. Don't ask me for further introduction. If I'm not investing, why would I make an introduction from somebody, in my network to invest into you? That doesn't make any sense whatsoever. And that's the wrong assumption that we've made as well, going into some of the meetings, thinking that if it doesn't fit them, if it's not the right time, they will still make introductions further. And we even asked for that. And kind of looking back on that just, that sounds idiotic. It didn't work well. The other piece is also appreciating the fact that such decision takes very, very long time to arrive at such decision, and respecting that and valuing that aspect, that it's not going to be an overnight decision, and not pushing that hard, and instead focusing on that communication, information, and education aspect of, I understand it's a big decision. I understand it's not something you're ready to pull the trigger now, but let's stay together, let's stay close, let's work together, and let me showcase you the process that we go through. Let me show you all of the mistakes we made, and let observe that as well. So those are some of the things that I'm definitely taking to very serious consideration through the next fundraising journey as well, and having again that focus on the long-term view that if you're not coming in the fund one, I still want to. It's not impacting our relationship. I actually respect that you want to invest more time learning more about me, learning more about my fund, so that you can potentially maybe come in a lot bigger into the fund too. Those are some of the highlights. Those are some of the things that I would highlight as well. And last but not least is also just clearly and focusing on me as a person first, and my fund partner, on who we are as individuals, just the integrity, the character, and the personality, and what it takes, versus just jumping straight into here's the portfolio, here's the strategy, here's the DPI and all of the metrics that we've achieved. Those come secondary, especially for early stage funds like us.
Absolutely. I mean, like one of the defining features of an emerging manager is that the manager of the fund is really the fund. And what you're really selling in the first fund is selling yourself, not really any track record or portfolio, any diversification. Is your ability to find and make the right decisions on the best entrepreneurs out there over the course of the next decade or so.
Yep.
But I would like to give a quick follow-up on your second point, which was introductions from LPs within Invest, because I think that's common knowledge on the fund side, right? For startups who are then going to pitch investors, and let's say they're being passed, it doesn't really make any sense to ask for an introduction to another fund. But I'm curious, what's a great alternative for that in the LP fundraising realm? What's the best intro path? What's the best introduction, or what's the best facilitator for an introduction that you can find to really warm up a potential lead as an LP?
Yeah, and it's not to beat the dead horse, but it's all relationship driven. At the end of the day, it's also being able to focus on not necessarily a rejection, or I'm not ready to make this investment at this stage, but also here's maybe just from personal interest standpoint, maybe I'm not necessarily interested in emerging markets, but also for me to be able to come back to the table and say, look, I understand that this is not the priority, or maybe this is not of interest, or doesn't really fit your personal investment thesis. But also, here's other funds, or here's other great managers that may be operating in your space. Just showing that humility and taking that, not necessarily a loss, but it's not a right fit for us, but maybe I'll help the other fund manager to, maybe you guys are much more perfect fit, because I know at the end of the day that will come back in some other shape or form. So really, also in any conversation, in any relationship, one of the first things is really focusing on what value can I bring to the other person first, versus just me opening up and doing the whole pitch deck presentation about that never works. That never worked well for me. That never worked well for me in any sales or in any relationship that I've had. So really, kind of the keeping that main focus on the value add. What type of value I can bring to you first, as an investor or as an individual, as a professional. Those are some of the things that really stand out.
Really appreciate your comprehensive answer there, and I agree on the relationship building. And also, I find it very interesting the differentiation that you made around the type of rejection. Right, is it rejection because of lack of fit, right, or is it a rejection just because I don't believe in this whatsoever? Because there may be a way for you to then spin that out and then be able to provide some value there to someone else who may be a good fit compared to just
Yep.
not believing in you whatsoever.
Yep.
Before we go into the rapid fire, I would like to ask you to look a little bit forward to Big Side Capital over the next 5-10 years. How are you thinking about firm building, even from the early stage, around firm creation, brand creation, expanding the team, keeping a consistent thesis over multiple funds? What are some of the things that you're thinking about right now in the beginning of Fund 1 to take over the next of the journey, the multi-generational journey that you were describing earlier?
But it almost feels like you somehow have an insider look into the meetings that me and my partner have on a weekly basis, because those are the questions that we ask ourselves very frequently, and we try to keep each other honest from that standpoint. Because right now, being, fund one. Yes, sometimes it feels like it's a rat race, and just invest as fast as possible, as much as possible, and deploy, deploy, deploy. But also at the end of the day, the credibility and the reputation of the fund in itself, of a brand, it's actually probably not a good idea to call ourselves a fund, instead a company. We're a venture capital company, venture capital firm. It's not a fund. It's not, it's not temporary. It's something here to stay. And that reputation, that credibility in the founder world, it takes, just like with anything else, it takes forever to build. It just takes one mistake to ruin everything. And it takes a special discipline to be able to also focus on just that value add aspect of portfolio management. I know it sounds as cliche as, every VC does that, puts it all over the website, that we all value add, value add, value add. We're no different from that standpoint. We will continue saying that, but also, actions always speak louder than words. And I really intentionally allocate good deal portion of my time on focusing on what type of value I can bring on a daily basis to my portfolio companies. And we spend a great deal of time strategizing around that. And it's a great referral tool as well, because some great deals come to us because the founders talk to each other. They talk to each other all the time, and they always, share the good and the bad. Because if, I'm able to succeed and make one successful introduction for you, that will go a very long way. I gotta hustle for that, but at the end of the day, it's greater than any PR, any marketing, or any other thing that we could do ourselves as a brand. So really, as kind of to answer your question in terms of where do you see this going, is really focusing on that credibility and that kind of just the brand in itself, or what Big Sky Capital is all about. That's got to be the focus. That's got to be the main thing, because if that's in place, great deals will come to us. I know that for a fact. And great investors are going to come to us as well. Great LPs that are in the network, that know what it's all about. That reputation is going to speak for itself, and is going to make my life as a fundraiser and a capital allocator much easier.
Great answer, and very insightful to peek inside your thinking around the generation to come around Big Sky Capital and the next funds. I do have some few rapid fire questions for you that may or may not be related to your work, and would love to end the episode on getting a chance to know more a little about Jahn himself. And
Let's do it.
we always start with this one particular question, which is, what do a lot of people don't know about Jahn Karsybaev that they should know about you?
Oh damn, that's a that's a loaded question, man. That's a tough one. Besides my background and just essentially coming from, I think, the growing up in a family of coaches. My dad is a boxing coach. My mom was a gymnastics coach, and growing up in that environment, it really instilled a lot of discipline, in a sense, just not only from perseverance standpoint, but also what it takes to be a great coach, and what it, how rewarding that is, and some of the elements of just being able to help somebody become a better person. Those are some of the things that I realized only later in my life as I matured as an individual, but I didn't realize that for a very long time. And I find that very rewarding also, even now, spending a great deal of time coaching a lot of my own kids' sports teams. So those are some of the things that I don't spend a lot of time talking about, but I think that's something that's not a very common knowledge.
I really appreciate you sharing that with us. And I'm curious about the answer to your next two questions, which one of them is one person that you have consistently looked up to over the course of your career, and why?
Consistently looked up to, I would, there's definitely quite a few mentors and great leaders that I've had throughout my journey, and also a great deal of very incompetent leaders that also I appreciated as much, because they actually opened up my eyes and taught me of some of the things that I don't want to be as a leader. So even recently, I was involved with a company where, just an extremely inexperienced and ineffective leader, and it taught a lot me about myself, of what I value and what I don't value in mentors and leaders, coaches in general. But definitely one individual that comes to mind, his name is Dusty Lashbrook. Is just we haven't been in touch for quite some time now, but he really, he's a person that I've met on the plane when I was leaving, my undergrad studies, and we were just sitting on the airplane and just struck a conversation. And just for no particular reason, he just helped me launch my career. He helped my sister get her first extremely lucrative, high paying job. Individuals like that, sometimes they come into your life and they just open up a completely different world to you, and just being able to pay that forward, definitely something that you'll never forget.
Fantastic. And last but not least, I'd like to ask you, who is one person that you'd like to send a thank you to, and who are you grateful for? But you'll only have to pick one person, unfortunately.
That one person, that's easy because and I should do a better job of expressing my gratitude to those that who really helped me. But I'd highlight my older sister because she's the one who really paved the way. Just came on her own at the age of whatever, 14, 15 to US out of Soviet Union, and really just built a very successful career, built herself as a successful individual, and then helped me come here as well and be able to grow myself, and opened up a lot of doors. So just taught me a lot about just being a very decent human being. There's just something that's I think on a daily basis, and it's something that I can't express enough of gratitude.
Really appreciate you sharing that. Something that resonates with me, and I think with a lot of listeners to this podcast. Jahn, this has been such a pleasure having you on this episode and having this conversation. Thank you so much for taking the time. And I do very much hope that we're going to get the chance to do this again when Big Sky Capital announces Fund 2, and we'll be able to cover all the learnings from that journey as well.
Yeah, Vlad, thank you actually for all of the things that you're doing with, exposing that world and being able to share the stories of the lessons learned through that journey is definitely much needed. It's definitely something that's not enough of. So, on behalf of everyone who is about to fundraise or actually fundraising right now, I thank you for that, because it's definitely very, very valuable content that you put out there.
I appreciate that, Jahn. Thank you so much.
Thank you. Take care.
What a great conversation. If you enjoyed it, make sure to like and subscribe to our podcast, and be on the lookout for a new episode in 2 weeks featuring another amazing fund manager and their story. This podcast was made possible by Flowlie. If you're a fund manager, angel investor, family office, or syndicate lead who receives a lot of deals or simply wants help sorting through the noise, create a free account today on Flowlie at flowlie.com. That's FLOWLIE.com, and get access to an AI-assisted deal screening engine and network manager that will dramatically improve how you work. Are you ready to take your investing journey to the next level and join hundreds of investors across the globe who use the platform every single day? Find the discount code in the show notes and sign up today. That's it for today's episode. See you next time.